Hello, I'm Jeffrey Ham, equity analyst for Briefing.com. Today is Wednesday, June 25th. The stock market ended the session with a decent-sized gain after some volatile action following the Fed's decision to leave the Fed funds rate unchanged. The S&P 500 was up 0.8% ahead of the announcement, climbed to a gain of 1.4% on its release, and then settled the day up 0.6%. The Fed left rates unchanged as expected, and its wording in the directive largely reiterated more hawkish comments leading up to the meeting from Fed Chairman Bernanke and other Fed officials. In its FOMC directive, the Fed said overall economic activity continues to expand, partially due to firming in household spending. However, the Fed expects economic growth will face the burdens of tight credit conditions, housing contraction, and the rise in energy prices. The statement says that uncertainty over the inflation outlook remains high, although it expects inflation to moderate this year and next year. The FOMC feels that downside economic risks have somewhat diminished, while inflation risks have increased. The Fed is likely to keep rates steady for quite a while, as economic growth will remain moderate at best for at least a few more meetings. Credit market conditions also are likely to remain fragile. These factors will inhibit any rate hikes. Addressing any uptick in inflation will not come immediately, particularly as the Fed expects inflation to moderate next year. In corporate news, MasterCard will pay American Express $1.8 billion after settling their antitrust litigation. American Express claimed that MasterCard illegally blocked American Express from the U.S. bank-issued card business. Boeing tumbled 7% on reports that it was added to a conviction sell list at Goldman Sachs, which cited economic concerns and fuel costs. In terms of economic news, May durable goods orders were flat, matching expectations, while orders excluding transportation fell by a less than expected amount. The data will not alter economic perceptions of a moderately growing economy. The decline in new home sales is leveling off after the steep fall in 2007 and early 2008. May new home sales fell 2.5% month-over-month on a seasonally adjusted annualized basis, which follows the upwardly revised 4.8% gain in April. The results are better than the expected drop of 2.7%. Home building stocks ended the session nearly flat with a 0.2% gain. 8 of the 10 economic sectors advanced. The tech sector, up 1.5%, led the way, with strength in large-cap names. The financial sector settled with a gain of 0.4% after a steep retreat from its session high of 3.4%. The sector went on the defensive following the FOMC announcement. The energy sector and industrial sectors were the main laggards. Separately, crude prices settled the session down 1.9% to $134.43 per barrel after inventory stockpiles posted an unexpected rise. Commodities as a whole fell 0.5%. I'm Jeffrey Ham for Briefing.com. Thanks for listening and have a good evening.